So I want to talk a little bit more about LMND Car. In my last video, if you saw that one with the Lemonade letter to shareholders Q4, I was maybe a little bit frustrated, and the one kind of negative thing I was hoping for or to hear more about was an update or further updates about LMND Car. How is Car going even since Investor Day just a few months ago? And are there any updates? And there just really wasn't much information on it there in the letter. And the reason I care so much about Car is because it's a really, really important step in the Lemonade thesis. We know, as investors, it's very clear to us, if you're following the Lemonade story, Lemonade is really dominant in the pet space and the renter's insurance space, and that alone could make them those are small markets in the relative grand scheme of things, but they're growing markets. Renter's insurance is growing, and pet insurance, and especially in the U.S., is growing even at a much faster rate as an overall market, and Lemonade within that is growing those books of business at a very rapid rate. So that could be a successful line of business for Lemonade, but it's really important that they can show us that they can convert those customers to Car customers over time, because of it you go from a customer that might pay $300 a year for renter's insurance policy, and now they're going to pay an additional $1,800 a year for their car policy. There's sort of a massive kind of uptick in the amount of premiums you could be getting from the same customers, and it could be the perfect. The part of the thesis is that Car, it's the perfect on-ramp, having these other policies that are profitable in their own way, but are these unloved policies, and then you have a view into those customers' world, and then over time can cross-sell them to home, to Car. And so just not hearing about that in the last letter was a little bit concerning, and kind of wondering, is the management delaying Car, or is there problems with Car? What's going on with Car? But I've been researching this further really closely, going back and looking at comments that management has made, and I think by and large, overwhelmingly, for the most part, things have been very much on track with what was said and what was planned. So I want to walk you through a little bit of that, of some of the commentary over the years, highlight a few bits of it for you guys. Okay, so we're going to go back in time here all the way to Q2 2022. This was a say question I had. So almost 3 years ago, nearly 3 years ago, I asked about how aggressively can we expect Car to be rolled out? What can we expect over maybe the next 12 months? And essentially the key answer I got was that we need to improve its loss ratio before we seek to grow it aggressively. So that was the main thing. Loss ratio was not good enough. Probably the Metromile book of business they inherited was not a good loss ratio overall. They needed to up their rates. It takes time to up your rates with regulators, and it's a slow, challenging process. So, and he even said some comments in here. This was interesting. Shai said, there's humility because we appreciate the complexity involved in getting a car insurance product growing fast while achieving profitability. So it's even nice to see, this is a line with sort of where things are at right now, that 3 years ago, they were making comments around the lines that, hey, Car is a complicated product. It's more challenging, is much higher premiums. There's sort of bigger risk, bigger reward if you do it right or you screw it up. So they have some humility and appreciate the complexity in getting this product right before really trying to scale it up. Okay, but so on the one hand you say, yeah, that makes total sense, that's awesome. But then on the other hand you say, hey, we've been talking right now as investors, you kind of, I think some of the frustration some investors have felt is, hey, we've been talking about Car for this was nearly 3 years ago, and so sort of when are we really going to start to see the fruits of that? But let's go forward through to some of the other things I highlighted here. So now this was 2022, then this was Q4 say questions of 2023. I referenced my previous question and said, hey, in 2022 You said we need to improve its loss ratio before we seek to grow it aggressively. With loss cost ratios improving, how aggressively will you expand this product? What percentage of IFP is car now? What might it be in a year? So Daniel said, hey, car is about the end of 2023. It's about 15% of our total IFP. We expect to roughly maintain that share in 2024. And again, this was at the end of 2023, this question here, so about a year ago. We expect to roughly maintain its share in 2024 and begin to expand significantly in 2025 and beyond. Put differently, car is going from losing share in 2023, really carrying its own weight and maintaining its share in 2024 and growing its share thereafter. I think this paragraph for me, and in light of all the comments, I think it makes sense, even where we're at with car right now. But in some ways, this probably, I read into this too much and was too optimistic to think, hey, car loss ratios are going to be nicely in check probably by the end of 2024. And so the end of 2024, once we start clicking into 2025, we look at, guidance for 2025, etc. Car should really starting to make an impact and significantly expand. That's why I was calling 2025 the year of the car. By the way, I don't know if management has ever called it the year of the car. Even Ask Grok, has Lemonade managers ever said the year of the car? And there's no record of that Grok could find. So if anyone thinks, I just want to apologize for that. If anyone thinks that is saying, hey, the year of the car, the management never said that. I said that in part because of these comments a year ago saying, hey, cars are going to come into significant expansion in 2025 and beyond. So, but then on the one hand, you can kind of read into that as an investor and say, yeah, like 2025, rev the engine, let's go. But then you can also read, if you kind of read it totally black and white what Daniel's saying, you say, well, in 2025, maybe that's near the end of 2025, it really starts to expand and beyond, right? So it's not totally clear even where in 2025 that expansion's going to sort of start to happen. And even what does expand significantly mean? I mean, maybe you hold your market share right now at 15%, and then maybe by the end of 2025, we're at 19% of IFP. I mean, that's a pretty significant expansion on its own, or maybe 18%, something like that. Maybe we hit the end of this year, that's where car ends up at. But then maybe 2026, IFP, as a percentage of IFP, car grows from maybe 18% to 25%. Maybe it has a much bigger leap. And then 2027, maybe it goes to, 35%. And then as slowly approaches, they outline maybe going to about 40% of the book of business eventually as they 10x their book of business. That was kind of the rough graph they showed at Investor Day. Then he makes a couple more comments in this answer, which says a car won't hit its stride until 2025. And then down here says this will really enable us. There's further refinement of our telemetry and the data science, and that really enable us to accelerate car growth in 2025. So again, 2025, but again, it doesn't say at the end of 2024 and the start of 2025, it just says in 2025. So on the one hand, you can read this and say, yes, by the end of 2024, loss ratios are in check, all systems go, let's rocket launch, year of the car, here we go. But then on the other hand, you can say, actually, probably just says in 2025. That could be halfway through or a gradual acceleration throughout the year. Another thing I did is I asked Grok to search all of Lemonade's shareholder letters, transcripts, presentations, interviews, etc., to find the story to tell us, has the narrative around car really changed? And it gave a lot of detail here over the last several years around car and different comments that were made by Daniel, by Shai, by Tim, etc., by the management team. But basically concludes it hasn't necessarily changed. Maybe the last Q4 was a little more cautious sounding or a little bit clearer in that, but story really hasn't changed dramatically according to Grok's analysis here. And all this concludes with a post I made, or a comment actually, that Daniel made on X, on Twitter, the other day, and then I replied my own kind of summary based on some of the thoughts I'm sharing here, a bit of a distillation of all those thoughts. But I'll play this little short video.
By 2025, during the upcoming year, we think we will be feature complete. We'll never rest on our laurels. We'll keep developing stuff, but we will get to the point where we feel that this is ready for prime time, that we can start really growing aggressively, and that will happen as the year progresses.
I said, thanks, Daniel. I think two things really happened, at least for myself and maybe other retail investors out as well. We were really too bullish on car for Q4 in 2025. I was partly bullish on Q4 for Q4 car growth because we could see signs that some of the car advertising was ramping, at least one ad that was on YouTube that some of us have been tracking. So even in Q4, it was starting to ramp the amount of they obviously were spending more on that car ad. But I was too bullish on that in 2025, thinking a significant ramp will begin to occur, but this actually hasn't been the communication given. As I outlined here, they did say expand significantly in 2025, but didn't really say where in 2025. It wasn't clear. And I said, we're also too bearish. Some of us, I think, maybe myself included, when I first read the letter on the car outlook, because the letter didn't have any update on car. In my mind, it's sort of like, if you're tinkering and you're learning things, it's like, I just love an update on the tinkering, on the learning, because it's so critical to the thesis. I mean, like I said earlier in the video, Lemonade could be successful just on renters and pet insurance, probably on its own, and have some growth and still grow into their valuation and beyond it. But car is a whole nother sort of spectrum of success that they could have if they become a very successful car insurance company that can more accurately predict risk and match rate to risk, which I believe they're going to be able to do all those things. But so without having any outlook, felt almost too bearish. But then some of these previous comments, thinking they're really just for the whole year, probably too bullish. And then I went on. I said, I believe the truth is somewhere in the middle of both these things. And to Daniel's credit, he's been telling us this for a year. As this quote says, and as I shared earlier, it's going to grow its share after in 2024. Car, I believe, the encouraging thing here, car is going to grow in 2025 as a percentage of the book of business. It should definitely be growing from, I think it's about 13% of the book of business now. It's going to grow, but maybe not as fast as we'd like, but it's going to be growing even as a percentage of, of the book, when the whole book might grow 28%, maybe even more than 28%. So the whole book's going to grow 28%. That means cars growing at least, 28%, if not more than 28%, if they're growing in their percent share of the book. And then I had this one other note I posted on X. I said, as Lemonade expands the number of states it sells car in, like currently it's only 8 states, but they're licensed in almost all states, we should see the cross-sell opportunities expand dramatically, which they said in the earnings call. It's only in 8 states, but they'll begin to ramping that up considerably through 2025 and 26. So again, it doesn't say the start of 2025, but through 2025. So it might be more of the back end of the year. And then through 2026, we'll see car available and pushed in more and more states. And then they'll be able to directly market that to their 2 million plus customers. So very exciting. And they say very exciting early indications, experiments are proving our thesis. So to kind of summarize all this, I think the truth's somewhere in the middle. I think car is still seemingly on track. They've been cautious even 3 years ago, said how they approached this product with some humility, knowing that you have to be careful and do this right. And so I still wonder, they're probably still even improving things like the claims process and making that more automated before they really scale this up. They're probably still getting the loss ratios down a little bit lower, it's still 83%. And they're probably, the good news is, as investors, they can grow 28%, maybe with a huge chunk of that growth coming in renters and pet insurance. Pet insurance loss ratio is now at 69%. Home and renters together is at 55%. I mean, Renter's insurance loss ratio might be some crazy number like 40%, maybe even less than 40%. It's probably a super profitable product that they feel, hey, we can continue to push marketing dollars into pet and renters really aggressively and still grow our book of business 28% while we're still learning and improving the overall car product. So it's very encouraging to see that Lemonade can grow, hey, 28%, maybe even more than that, with a large chunk of that growth coming in renters and pet insurance space, which clearly it can be very, very profitable unit economics just within that space. And then car is only going to get better and better as the quarters go on. So those are my updated thoughts on car. Thank you so much for watching. Let me know what you think down below in the comments. And remember, it's in the bag.